Thank you so much for joining today. This video is going to be a complete guide to equity. Let's just jump right in. Let's have a look at Investorpedia's website to understand equity. Equity or equity, call it however you want. It's also commonly known as shareholder equity or owner's equity. Now, you can typically find this on the balance sheet, and it will help you look at the complete book value of a company when you equate it along with the assets and liabilities in the accounting equation that we spoke about in the previous video. Alright, let's now understand this a bit better. Equity or shareholder equity represents the amount of money that's returned to a company's shareholders if all assets are liquidated. This means that this is the amount that all shareholders and owners have put into the company. Maybe it has grown over time because it's calculated on a percentage basis, and if the company were to pay off all its debt and liquidate its current assets, shareholders' equity makes up the portion which would be returned to the company's shareholders at the time of paying the debt back. The formula for shareholders' equity would be shareholders' equity equals total assets minus total liabilities. Why? Because on the basis of the accounting equation which we studied in the previous video, so if you haven't watched that, you can go ahead and watch that. The accounting equation is assets equals liabilities plus shareholder equity. Your equity can increase and decrease based on the inflow and outflow of money. How that happens is, let's say you invest some money into the company today. That means that your shareholder equity has just increased. Let's say you pull some money out of the company today. That means there is a decrease in your owner's equity. Now, the same thing goes with other forms of investments as well. Let's say the company was looking for maybe some equipment. Either it could be a truck, it could be a crane, or any kind of equipment. And let's say you were able to provide that to the company. Now, that is also a form of increasing the owner's equity. If you increase your investment in a company, that is increase in owner's equity. If you do the opposite, where you pull money out of the company, that is a decrease in owner's equity. Anytime there's an increase in revenue, there is an increase in owner's equity. What that means is, let's take an example of McDonald's or KFC. They're in the business of selling food. The more food they sell, the more their revenue increases. The same goes with any other industry or any product. The more a company is able to sell its product, the more there is an increase in revenue. Let's take Coca-Cola for example. If Coca-Cola sells more bottles of Coke, they would have an increase in revenue. Now let's quickly talk about profit as well. A company is able to achieve profitability when they can manage their margins and understand how to price their products better. Now let's say a company does revenue of $1 million. $1 million being the revenue will also have expenses to make the product, to go ahead and ship it, to warehouse it, or to build a distribution network around that product, right? Now that costs money. If you subtract all that as expenses, there is money that's left over from the sale of multiple products. That would be the net profit. So if a company has done $1 million in revenue in 2020, and let's subtract about 50% of that as expenses, and we're not going to take into account taxes here, we'll have to calculate that separately, but let's say 50% of it is subtracted as expenses. The remaining 50% would be the profit that the company has acquired on revenue of $1 million generated in 2020. Now, equity is always fluctuating, so let's look at the methods of increasing equity. To summarize, equity would mean investing your personal assets into the business. If you'd like to increase equity, you invest more of your personal assets into the business. It need not just mean cash, it could also be any equipment. The second method of increasing equity would be a total increase in the revenue of the business. Now let's look at this once again. investing of personal assets in the business would increase equity, but that does not mean an increase in cash in the business. You can also increase cash in the business by going out and getting a loan from the bank, but that's not how you increase equity, because that would be a liability, because you're taking on a loan or taking on debt to grow the business. Now that could be a profitable model if you're able to manage the interest rate on the debt in comparison to what you're able to generate because of the debt that you borrowed, but it will not increase the value of equity in the business because it's not an investment of a personal asset. It's money that's borrowed from a bank. So it would not count as increasing equity. Now, if there are ways to increase equity, there should also be a way of decreasing the equity. First thing, of course, if increasing equity would mean that you have to put in personal assets into the business, then decreasing equity also means the same. Anytime you take money out of the business, that would result in a decreasing of your equity. The second thing would be any kind of expenses. So expenses meaning any business expenses, maybe payroll or marketing, advertising, any kind of expenses would decrease equity. If you'd like to understand more on the types of business expenses, you can head on over to Investopedia and get a complete understanding. But here's a quick look. So any expenses, credit card processing fees, advertising and marketing expenses, or equipment, insurance, any interest that you've paid on money that is borrowed, any maintenance or repair costs, office lease, utility expenses, these are expenses that would decrease shareholders' equity. Thank you very much for watching this video. If you're currently running a business or you're planning to run a business in the future, financial understanding is very crucial. Hence, if you enjoyed the content today and you think you learned something, please go ahead and like this video. It really helps boost the algorithm and helps this channel get ahead to many subscribers that are just like you, looking for information on the subject and are looking to broaden their understanding. So thank you very much and hit that subscribe button.